So it appears that the debt ceiling bill will pass Congress. At least the pre-market believes that. And we're starting to see that, looking like a good start to the week if things follow through in the morning. The NASDAQ is up strongly, continuing the rallying from the last couple of weeks. So that's the first piece of good news. Number two, well, this is not as good. The 10-year bond, the rates are down, but the 2-month is up. So the 10-year had been going up and up and up and up, but now it's bouncing down in terms of the interest rate, which means the bond prices are higher. But that would indicate more of a flight to safety because the inversion continues to expand. So folks are looking for that 10-year opportunity to hold on to almost 4% interest rates for an entire 10 years. But you got to always remember the flip side of that is that when you invest in that high interest rate 10-year yield, you now are also getting like an option, if you will, that if the interest rates go down, the underlying bond value will go up. So it's a pretty good opportunity, but I'm not an investment advisor and that's not investment advice. But anyway, the inversion continues to be big. And the only reason I can think that the inversion is big is because folks that are only investing their money for a short period of time, they're just looking for a much higher return on investment right now, which, yeah, there you go. All right. So oil right now, oil is just down a little bit this as we go into Monday night. But it's staying in that same, now it's in a really tight range, 70 to 73 right now, but it's not dipping back down below that 70, but it has not accelerated back up into the 80 territory. So I'd say overall, that's really, really good news. If it stays in this 70 area, going into summer, I think that's really, really strong. That's going to be good news for the Fed. Okay, so finally, the truck tonnage numbers are in. Truck tonnage is a way that you can look. It's like a canary in the coal mine. Commonly, if truck tonnage starts to go down, that's an indication that there is a recession coming because there's not as much goods being moved around the country. Well, truck tonnage is down 2 months in a row. In March, it was down 5%. In April, it's down 1.7%. And also rail loadings were down for both months as well, even stronger than that. These don't automatically signal a recession, but it is something to pay close attention to. I'll be looking a little deeper into this. There's also some other numbers I want to take a look at. I'll give you those numbers on Wednesday. Let's see, what else do we have here? We have Nvidia and MediaTek have decided to partner up on a technology to power advanced vehicle infotainment systems that can stream video or games interacting with the driver. In other words, this is something that would be after a car has full self-driving capability, where the driver sitting in his driving seat can now play games or interact with these kinds of software as a service on a gaming system within the car. So that's an interesting piece of news. Nvidia continuing to be a major player in the news right now. We'll see what happens as the week goes on. It's pretty likely that Nvidia will continue to see strength, although there might be at some point there might be some profit taking. I don't play the stock, don't follow closely enough to even give you remotely anything like advice. So, all right. So let me just really quickly go over the stuff that if you didn't listen last night, if you didn't have a chance, if you were busy, playing this weekend, just real quick. Tuesday, we have home prices. The street had no opinion. I'm saying prices will be going up. I have reason to believe, even based on some information that I gleaned myself, not just from the national statistics. I think you're going to see prices going up. Fed is not going to like that, but what are they going to do? There's nothing they can do about the fact that there's not enough inventory. Next, we have consumer confidence index. That's expected to show a drop. That's something that the Fed would like. I don't know why the consumer confidence will be dropping at this point. They should be seeing slightly better prices at the supermarket, or at least not as great increases, as well as gas prices are under control. And those are the two things that consumers pay the most attention to. We also have job openings coming on Wednesday. Job openings, the street is saying that those are going to stay flat, still showing a 9-to-1 ratio, job openings to people looking for jobs. That is not a good number for the Fed. And it's, as I continue to point out, I don't see how you have a recession. Taking into consideration my truck tonnage numbers up above, even when you know that truck tonnage is going down, I just don't see how you have a recession. When folks are employed at the 3.5% level, and there's 9 jobs for every one of those 1 million people that are looking, it just makes no sense that we're going to recession. Think of it this way. If people are earning money full-time, their earnings are actually going up, as another report will show on Friday. Earnings are going up and they're working full-time, they're getting their hours in, then they are going to want to spend the money, or they're going to get to spend the money, or they will make their budgets. Now, there was a lot of borrowing earlier this year, so maybe people will cut back a little bit because they want to pay off some of that debt. Who knows? You never quite know how consumers are going to react. But overall, people are making money and spending money. Then you need to make the products and offer the services in order for them to spend it. So it's hard to see how a recession happens. Now, you could have a flat economy, which we are kind of flattening out right now, but a true recession where there are businesses closing and people in trouble and people not able to get jobs, I just don't see that that's coming anytime soon. Thursday, we get the Purchasing Managers Index for both construction and for manufacturing. The street is looking for bad numbers for manufacturing and okay numbers for construction. I think that's probably about right. Could be some surprises there, but I don't think either one of those will affect stocks. But it might affect the Fed if the numbers are too strong. Then we're looking at Friday's the unemployment numbers, or the employment numbers, however you want to look at it. ADP numbers are out on Wednesday, and then the Labor Department numbers are out on Friday. In both cases, the street is looking only for an additional 180,000 jobs compared to 250 to 300,000 last month, depending on the report. That would be a pretty significant drop-off for a single month. I don't think that's going to happen. I think maybe I'll be surprised. Maybe they'll be surprised. Somebody's going to be surprised, possibly. And the Fed would, of course, love it if it's only 180,000, although that is even probably too strong for them. The street is looking for a 0.3% increase in wages compared to a 0.5 last month. The 0.3 would be a little too strong for the Fed, but getting really close to the number they'd like to see, which is about 0.25. So, potential for Friday to definitely rock the market one way or the other, based on these employment numbers. I think we'll still be looking at 3.4, 3.5% unemployment. I think we'll be over 200,000 in jobs. And I could go with the 0.3% increase in wages. And if we're in that ballpark, I think the market continues to be okay. Overall, I think maybe the market continues to be okay this week. Probably no, unless there's really big news that from someplace else other than these stats. There's no big earnings reports coming out this week, so it's not going to come from earnings reports. A couple of tech companies, but not really, like Salesforce is this week, but not the ones that people really pay a lot of attention to in terms of making decisions about the macro. So I think the macro continues to be okay this week, maybe slightly trending up. I think that Tesla, with all the good news that Tesla has right now, Tesla continues to beat the market. The market goes down, Tesla may go down, but maybe not as much as the market. I think we're at that point where the narrative has changed. You've heard me talk a lot about that last week. I think the narrative has changed, and as a result of the narrative change, Tesla will continuously outperform the market, maybe not every single day, but over the week, over the month, Tesla will be outperforming. There could be obviously announcements and things that would cause that to go negative, and there could be announcements that could cause that to go really, really seriously positive. So as mentioned yesterday, I think this could be the week. Other people are saying the same thing. I think this could be the week that Tesla breaks 200 again and starts going towards a trading range of the 205 to 215 to 217 range. And then we'll see if it can break out of that 217 before, we get stats on Saturday next week, probably maybe Friday, but maybe Friday we'll get stats from China, get some idea of what the numbers are looking like in China. So, you never know where the news might come from with Tesla because there's news every day. But anyway, that's about it I got for you tonight. Go ahead and hit subscribe and notify if you'd like to be. I got lots of more interviews coming up. I think we've got one from Brian Wang tomorrow morning. So you might want to check that one out. And if you hit notify, then you'll be notified so you can be sure that you don't miss any of them. So it's been, hey, I hope you had a great weekend, and it's been fantastic talking to you.